Francois Savary, welcome. Thank you for joining us. So let's
You're
dive,
welcome.
dive straight in. Let's talk about the rates because the ECB added to the caution from the other central banks about drops in interest rates. Lagarde was saying, same as all the other central banks, that she thinks rates will stay longer and higher at these levels. What do you think?
I think that this is a message they are obliged to convey because the fight against inflation is not over. And they exactly know that we are entering a phase where the reduction in inflation number is going to be more difficult than it was over the last quarters. So I think to maintain the idea that higher for longer is the idea that you need to have to put in the mind of people. So it's logical to my point of view that they defend this strategy.
Some analysts are saying that Powell is trying to massage long bond rates, that he prefers bond rates to stay where they are or a little bit higher at least. But he certainly doesn't want bond rates to go down that much further from here, does he? Would you
No,
agree
he
with him?
doesn't. No, I think, yes, he doesn't want them to go lower. You know, it's very difficult. He's facing a very dangerous game to play on the long part of the curve, which is what, for example, some Fed members invoked in the course of the last few weeks, saying that through the bond correction, you have a reduction in financial condition, which was good for the fight against inflation. If you have volatility continuing on the long part of the curve, it is very difficult to use that as a tool to manage the monetary policy. Yes, they want to see more restrictive financial condition, but they don't want to see volatility on that part. So it's a very dangerous game. I think that they are happy with higher rates, but they cannot rely too much on that to consider that they are done with other part of the monetary policy.
We're waiting for some important inflation numbers from Europe, from UK, from USA. Do you think the bond market this week will be more wait and see, and they're going to keep their hands in their pockets?
I'm not sure. You could have some surprise on those numbers. You know, there is some kind of consensus that has emerged that the number is going to be good and that it's going to be very small and that it will confirm that there is a trend towards inflation going downward. I think that you can have a surprise. I think that the bond market is very, very reactive, very volatile in the last few weeks. So I do not consider that the market is going to forget and about those numbers. He's going to watch very carefully, especially considering what happened with Moody's at the end of last week. They have put the sovereign rating of the US under review. I think that you have conditions on the bond market, to my point of view, that will justify some volatility staying with us.
All right, turning to stocks now. There's some question about hedge funds being short for quite a sustained period of time. Um, we had a reaction from in the luxury sector after Richemont announced some very disappointing numbers. How do you think this is going to be affecting the markets, or does it at all for the next few weeks?
You know, it has already affected the market. The luxury sector in Europe is one of the main components of the big indices in Europe. Never forget that people say in the US you have technology, in Europe you have luxury. In a way, it's a very short way of saying things, but luxury are a very significant part of indices. And you know, over the course of the last few years, we have get used to the fact that luxury was a very stable, high growth sector of the index in Europe. So if suddenly you have a change, of course, and a lasting one, and the numbers of Richemont were not the only one to show disappointing figures. You know, LVMH was not particularly good, and you had some quite volatility, a lot of volatility on the luxury sector. So it's very important for investors because it will tell you, is it a change, a lasting change? Luxury is suffering now. It's going to suffer for many years, or is it just a blip connected to the fact that China did not recover as much as expected? That's, I think, a very interesting question and something that people need to observe in the way they look at European equity indices in particular.
All right. Well, during that report from Richemont, one of the bright things was the increase of sales in Japan, presumably from the drop in the yen. Um, the yen is approaching 152. A lot of analysts are saying that's the point in which central banks, or Bank of Japan in particular, could intervene. Surely, or maybe they will, but surely intervention of this sort only works when the market isn't expecting it.
Completely. This is essential. And I would say it's, in a way, the Japanese authorities are in a very difficult position with the question of intervention. Why? Because on the one side, you have a government who has decided to enact a new fiscal stimulus package in order, considering the word of the government, to help consumers face the inflation that appeared in Japan in the course of the last 2 years. So you have that on the one side. On the other side, you have a central bank who is very clear. They don't want to act too quickly in terms of monetary policy. They believe that they have time. They want to maintain a monetary policy that is quite accommodative, and they want to stick with a very gradual process of changing course, waiting for some numbers that could confirm that everything is fine. And then you would have an intervention. It's very difficult in such a framework to do an intervention because this is not really compatible with what you are doing on the political front and on the monetary front. So maybe there will be some intervention. I'm not sure that it's going to be significant.
All right, turning back to stocks just for a minute. ICBC in New York and, in fact, Allen and Overy in London suffered from ransomware attacks last week. Are we going to focus again on the cybersecurity stocks? Is this a sector that is well priced at the moment? Cyber is due to, or is expected to, double in size over the next 5-6 years. What do you think about looking at cybersecurity stocks?
I like the term of the theme of cybersecurity. And I consider that with the development that we have in AI, this is obvious that cybersecurity is going to be a very, very important element in the development of all the technology that we will face in the coming years. Yes, I think that this is an interesting theme to consider in a portfolio. Is it correctly priced? Obviously, you have high valuation on certain of the stocks. It's not a game for everybody. If you don't like volatility, this is not the type of stock that you want to own. The famous name, you know them. They are American company. Most of them are American company, and you can play it through a single stock selection. This is one way of doing it. Or if you prefer to limit the volatility, be more diversified, then there exists some ETF on the cybersecurity that could be interesting in a portfolio. Again, as a diversification, not something that should represent a significant amount of your investment.
All right, turning to indexes now. Dow Jones Transport Index has been quite interesting recently. Do you think this confirms Dow theory?
It tells you one thing, to my point of view. We will see if it confirms in the coming months. But for the time being, what it tells you that you have something happening in the US economy, that there is some kind of lending, but there is a lot of uncertainty about the characterization of the lending that is underway in the US. Is going to be no lending, soft lending, hard lending? It tells you a lot, and it tells you that you should still remain very careful with macroeconomic numbers and don't consider that the soft landing is a sure thing and that everything is going to be easy in the US in the coming quarters.
Okay, so you prefer to dampen thoughts about a Christmas rally, for instance?
I have a lot of difficulties to imagine that there will be a significant Christmas rally. We are back to 4,400 on the S&P 500. I think that there is a limited potential from there. And it's already, the market is pricing a lot of good news and is not prepared to face any negative development. So yes, I am not in favor of considering that a Christmas rally is going to materialize in the coming week.
Looking to the market the week ahead, what numbers are you looking forward to?
Obviously, you have all the inflation numbers coming from the US, both the CPI and the PPI. But what is interesting is, as I mentioned before, this week is going to be a very important week in terms of macro numbers coming from the US. you will have numbers coming on different front. Inflation, CPI, PPI. You will have numbers coming concerning the real estate business with some indices being published over the week. You will have some indicator concerning consumption in the US with retail sales. You will have some forward-looking indicators like the Philly Fed index, which is very important in assessing the development of economic condition. So I think that this week in the US is very important because you have broad kind of statistics that will give us an opportunity to reassess the macro picture in the US. You have also CPI numbers coming in the UK, very important numbers. You have CPI numbers coming out of Europe. You have some numbers also coming from Japan that will be very important, especially the orders. So I think that this week you have a lot of things to think about and to observe in terms of macroeconomic picture.
Okay, as a sum up, maybe we could say that you think the market is expecting good inflation numbers this week.
I agree.
Perhaps they may be mistaken. And secondly, that you're cautious on bonds and on stocks at the moment.
I think that bonds, I'm not so cautious. I would say that at the end of the day, as I said, I believe that down the road, there is an opportunity to be invested in bonds. I think that we discussed that last week. It was the bond market went too far too quickly, to my point of view. When we were at 4.5, there was no reason to jump into the bond market. I still believe that you will have opportunity to enter the bond market. People who want to build position on the bond market for the medium term, I think it's interesting. I would be more reserved in terms of trying to chase the recent equity rally. I believe that a lot of things are priced in. So I'm more in favor of bonds than equity in such an environment.
Well, the 30-year auction went quite badly. It was quite disappointing on Thursday. Are you surprised about that? And would you favour the 30-year over the 10-year, for instance, or not?
No. I wouldn't go too far on the curve. I think that it would be. I don't think that it's interesting for the time being to go on the 30. I will stick to the part that we mentioned earlier, which is closer to 5, 7, or try to build a barbell strategy, having a 10 plus something that is shorter maturity. I think that there is no need for the time being to go on the 30 years, to my point of view.
Francois Savary, as ever, thank you for joining us. It's been wonderful talking to you. See you next Monday. Bye-bye.
Bye-bye.